Dan Ives, I'm pleased to say, joins us now. So Dan, you took us there, let's begin there. You've got a 220 price target on Apple. We've just had a 100 basis point move in real rates since the beginning of August. How do you get to 220 on Apple if that's the rate backdrop?
Yeah, look, I mean, and clearly it's a brutal backdrop for tech stocks, but for Apple, it's a good example. I mean, I look at iPhone 14, it's tracking what I believe is mid to high single digits above iPhone 13. I think the growth and the underlying numbers, Street is still underestimating. So I think Apple's a name. You're going to see this digestion period, and obviously in terms of the Fed backdrop, but in terms of growth and in terms of what's happening on services, that is still underestimated in terms of what we see. And that's why I believe Apple here, risk reward, makes it just a compelling, I view as a table pounder name if you have a horizon 6-12 months out.
Dan, let's just sit on that. Just the shift to the higher ASPs as well in Apple units. Is it just about the volume or the average selling price as well that's giving you a little bit more confidence?
Yeah, I mean, we think it's about 80, based on our estimate, 80 and 90% are Pro Max. That goes to 60-65% in the year ago. So that's significant for ASPs, for revenue, for Apple. I think a lot of that is China-driven. We're seeing many more go toward the Pro and Pro Max. And overall, despite this dark storm cloud in terms of the economy, brisk sales, in the U.S., even what we've seen over the last week.
Dan, are you confident they can meet that demand on the supply side?
Well, I think they have done almost superhero-like ability, what Cook and Cupertino have done in Asia to get ready for iPhone. We think 90 million units was the initial order, and that's already, in stone. I think they could be potentially upping those units in terms of what they're going for. Supply, I think the worst is in the rearview mirror, and that continues to be our thought in terms of tech. One of the biggest risks was the supply chain, and we're starting to see it significantly moderate. And that's why it's bullish for Apple and it's bullish for names like Tesla that we see in China.
Dan, where does the consumer fit in here stateside, when many people are forecasting a much, much weaker one over the next 12 to 18 months? How does that fit into the bullish thesis around what is essentially a high-end consumer-priced piece of hardware?
Yeah, look, I think it's easy to just paint it with the same brush, say economy, consumers are not going to upgrade. John, I look at our numbers. I mean, I think there's about 240 million of a billion iPhones that have not been upgraded in 3.5 years. I mean, the pent-up demand is massive, which is why this continues to be able to power through any sort of economic downturn that we're seeing. I believe that's what we're seeing play out. And I think when you look at Apple, it's one, even on the services business, that's when it's going to see an uptick. And that's why I just continue to view Rock of Gibraltar names, Apple, Microsoft, some of the cybersecurity names like Palo Alto and Zscaler. It's clearly easy to yell fire in a crowded theater here on tech. But, our best calls have been in these environments in 2000, 2001, 08, 09, and early 2020. And that's why we continue to stick to our knitting in terms of tech.
Do you need lower yields for this to work, though, Dan? Do you need a repricing of yield to lower for these calls to work?
Well, clearly the fight in the Fed, continues to see a risk off and multiple compression. But I do believe a lot of that started to get priced into these names. And I believe it's the most negative we've seen tech investors going back probably 2009, 2010 in terms of these names. So I'm just saying a lot of bad news, not just Fed and macro baked in relative to what we're seeing growth. And also the enterprise names are holding up well. Microsoft, Oracle, among others.
There was one name you didn't mention in all of that. You named most of the big tech names, the likes of Apple at the front of it all. Dan, you didn't mention Facebook. How do you think these social media names are going to hold up in the face of slowing growth, not just domestically but worldwide, and tighter Fed policy?
Yeah, well, I think there's a bullseye on social media names, specifically names like Meta. I think they're going to have hurricane-like headwinds, not just because what we're seeing in terms of slowing macro, but also digital advertising dollars and what's happened with the Apple iOS privacy issues. And I believe social media, that's why you have Facebook going to the metaverse and some other areas. And I think numbers could continue to be under pressure over the coming quarters. That's why in tech, it's a bifurcated tech landscape. We stay away from social media names. We continue to focus on enterprise and our core consumer names.
Dan, got to fit this in. You're a bullish guy. Some people would say certain names are permeable. Apple might be that name, and I'm sure you'd appreciate that. Can you tell me the number one risk to your bullish thesis at the moment for that name?
Yeah, the number one risk is China. I mean, that can, from a supply perspective, that is the number one risk in terms of Apple. despite everything that we've heard. And at least so far, what we're seeing, going back even to the last month, I feel a lot of that pain and bad news from a supply chain perspective are in the rearview mirror.